Hey, CGS investors, it is Monday, March 4th. We got a lot to cover today. Let's just start off from a really high level, and then we'll work our way into the nitty gritty of the market details. Now, keep in mind, if you are new and or you want to learn a lot about the markets, make sure you attend our bi-monthly mentoring sessions. We do two of these generally every 2 weeks. We do one, they're an hour and a half long. You can come into the webinar, ask all the questions you'd like. We cover all the charts and things you'd like. They are recorded, so you can come into the members area for CGS and go there. Also, if you go to the menu, the drop down and go to mentoring sessions, you can go here and watch all the past recordings if you want to as well. So super educational. You don't need to watch. You can just play it like a podcast. It's mostly explaining things, so it's not so much visual unless we're looking at a particular chart. But I wanted to make sure everybody knows to attend or watch the recording at some point because they are very, very powerful in helping you get the right expectations from the market, expectations from our strategy, and to have the right mindset of know what's coming and be mentally prepared for targets, for stops, for trend reversals, all of those things. Because if you know they're coming, they're not a surprise, and you don't panic, you don't get confused or frustrated. So that's important. The other thing I'd like to touch on here is let's actually pull up our stage analysis of the markets. Again, I believe we are in a stage 3 topping phase. Now, the major indexes are hitting new all-time highs, like the NASDAQ and the SP 500, and they are definitely heavy weighted because of the large cap tech companies and AI and NVIDIA and the semiconductors really screaming to some new all-time highs. But overall, the majority of the stock market is actually floundering. And a member brought this up actually in our mentoring session. RSP ETF, this is the SP 500, but equal weighted. So making every company in there have an equal weighting to the portfolio. And as you can see, we are getting up here to put in potential double top. We are getting right into this double top phase. Now, it can poke to nominal new highs. These are major long-term charts. This is the weekly chart. It doesn't have to come up and touch perfectly. It could fall short. It could also go higher and then roll over. But overall, the majority, when we look at the SP 500, is really just coming up to a double top scenario. And a lot of people are piling into the market. We can see this with money moving into the ARK ETFs, the small caps. We're seeing money flowing into precious metals, which are one of the last key sectors and commodities that do really well just before the stock market rolls over and starts a major recession. So if we take a look, we're even seeing Bitcoin, which we can touch on here in a minute, because I know a lot of people are excited about Bitcoin. Bitcoin's also one of those aggressive, fast, easy money type of moves, very similar to small cap aggressive traders. And people are flocking to Bitcoin and the growth stocks. And so that is a sign that the market is sucking in investors here near the highs, and more or less people are going to get left probably holding the bag of all these stocks before they drop. Now, here's the Russell 2000. As you can see, we had the market rally up, a blow-off phase, a big correction, and we're really treading water in this big bear flag pattern at this point that is pointing to a much lower move. Now, this is a stage 3 type of topping pattern, which we can see here, blow off top, it consolidates. And let's blend this. You probably have seen it already, but RSP plus IWM. So this gives us the large caps equal weighted and the small caps, which is like the majority of the stock market in terms of performance. And you can see we are definitely in this kind of topping formation that's unfolding once this loads here. So this is the overall general market. This is a majority of portfolios, how they're moving, which means we've been in a big pullback in 2022. And really the market is really just kind of struggling and just slowly pushing up. And a lot of people piling into the small cap growth stock phase here. And I think it's going to end pretty ugly down the road. But at this point, we are in a strong bull market. We are long equities. And that kind of leads us over to where we are right now. So let's go take a look at the big picture here of our weekly trend chart. This is our long-term kind of investing tide of the ocean. We like to look at the stock market like the ocean. When the tide, we're in a bull market, the tide is going up, it lifts most stocks. When the tide is going down, we don't want to be part of it. Most stocks go down. And of course, we are back into a rising tide and we are long riding this market. So as much as I think the market is close to a top, we're getting closer. It doesn't mean we're betting against it. And we are actually long this market. So that is where we are. And when we look at our positions here, we can see the SP 500 is in an uptrend and we are long the SP 500. We are also long the NASDAQ, or sorry, we're not long the NASDAQ. Oops, I had these charts flipped around here. We are long this chart here, the SP 500, and we hit our 15% target in the NASDAQ. We hit another 3% target on a re-entry, and we are now sitting on the sidelines collecting interest on this portion of our position using BIL right now. So we are long SPY with half the portfolio. We are long BIL with the other half. I'm just going to go to the daily chart here just to keep things simple. And as we can see here, last week we got paid out another decent dividend. More or less, the way this works is every day the share value goes up as it's paying interest to people who own this ETF. If you hold it past the maturity date, it pays all that out or a good chunk of it out as a dividend, and then it continues to rinse and repeat. So, for example, if we buy it here and sell it over here, we've earned that interest. We get the gain in shares. If we buy it here and exit over here, we get this gain that took place paid out in a dividend. And then we also get this added value going up. So the way it works is it's just monthly cash injections into our account. So we'll see these amounts get deposited usually 5 to 7 days after it pays that out. So we got paid a nice dividend there on half of our portfolio last week. It should show up in our bank accounts. And of course, this money will go to work again on the next trade when we re-enter. So all the earnings, all the gains are compounded. And that's how we're able to really get a lot more out of the market by making money, locking it in, and then compounding by investing the new larger amount of money going forward. So going back to our members area, I want to keep in mind the different strategies and stages. Obviously, I believe we are in a stage 3 for the majority of stocks, other than the few pockets of stocks doing very well. And the key here is to understand different strategies work in different market conditions. Now, the CGS strategy can work through all the market conditions, which is why it's so powerful, which is why we focus on it and provide auto trading. If you don't want to follow the trades, you don't want to watch these videos, you just want it done for you, there's auto trading, and that's why we offer that there. The other strategy we have that works around the clock is the OTS, the options trading signals. This is for much more active traders. This is 20, 30 trades a month, selling and writing options, fairly advanced, but very powerful. And of course, these two strategies can pull money out of the market all the time. And then, of course, we've got investing, longer-term investing strategies that do very well during bull markets. They don't make money during falling markets, this strategy, but it does avoid it. So you keep your capital and then you can reinvest it during the start of a new bull market and ride it up. So this is very passive. This is the ocean tide going up or down, allowing you to catch the upside, avoid the downside, and rinse and repeat. And then, of course, we have the best asset now, which is trading the hot sectors, which struggles. It doesn't do very well in a stage 3. It can make money during a collapse in stage 4. Trading inverse ETFs, just like the CGS, we'll trade inverse ETFs to profit from falling prices in a collapsing market. So that is kind of important to understand what the different strategies are. And this phase that we're in right now is a transitional phase. It is difficult to pull money out of this market, and you have to be very, very cautious. So let's go on and take a look at a few different assets. Let's go take a look over at the gold. We've got a big move in precious metals taking place here. This is the daily chart of gold. Friday, we saw a bank looking like it was going under in the States. We saw gold take off. And then, of course, we've got it continuing to rocket higher today. If it closes above 2,100, that'll be a pretty powerful signal. We have seen it spike up way beyond here and then crash back down. So we'll see how that goes. But overall, this is a very strong move. And when we look at the monthly chart of gold, you can see here it has been rallying, a nice bull flag rally, a tight little bull flag rallying. It is in a strong uptrend and pushing higher. And we've talked about this many times that there is the potential we go into something very similar to what happened over here. We had a more or less a multi-year kind of consolidation in gold. And then we saw a multi-month rally, a huge move in gold to the upside. And then we went into another multi-month consolidation, which this is where I think we are right now, is in this multi-year consolidation. And then just before the stock market puts in a top, we see precious metals rally and do very, very well and actually push higher while the stock market starts to top out. And so I think we're starting that potential rally. This is when precious metals and miners can come to life for a few months and become the leaders and become the shining stars as the stock market tops out. So this is, in the grand scheme of things, this move up in gold is more so, while it's exciting, it's a red flag that I think the economy and a big downturn in the markets is coming in due time. But again, we're going to continue to ride the markets higher and take advantage of these plays. So this is what I think is unfolding. I think it's going to be very similar in terms of silver. I think we could see silver muscle up and have a decent run. It could run to 30, maybe it even runs even higher. Silver is definitely still struggling though. It is trying to change its trend. It's all over the place. This is the monthly chart. If we look at gold miners, they're up significant again today. In the grand scheme of things though, is clearly in a downtrend when we look at the big picture. But a lot of people don't look at the big picture. They focus on the short term and they see these huge, more or less 3 back-to-back blow-off days. We went from an oversold condition and panic selling and lots of bad press to a huge pop. And now we're right up into resistance and we're definitely seeing it get stretched to the upside. But, you know, we're still within a downtrend. A 2-3 day pop really doesn't signify a new trend. We need time. We need it to hold up here. We need to push higher or hold its ground for something significant to really come through. So this could be the start of something, but keep in mind, we have seen these massive rallies over and over again in the precious metals space. You know, 15% rally. All of these are very significant. 17%, 17%. 9%, which is just pretty much what we're at right now. We have a lot of these big rallies that fizzle right back out. So we're not out of the woods yet. Gold is the only thing in the precious metal space that I like, that looks bullish. All the rest of these assets are just really volatile. We're not seeing any confirmation other than people piling in here. And it seems money is flowing into alternate assets, which is gold in Bitcoin. I think the banking system in the US is about to go for one heck of a stress test. We got another bank going under from the looks of it. If we, gold, people are moving to physical currency, which is gold. And if we take a look at Bitcoin, Bitcoin is surging here. I'll just flip to the monthly chart so you can see the big picture. It is on the verge of hitting some new all-time highs. It's gone parabolic, has that alternate asset, and people are moving into these aggressive investments or trading vehicles. Bitcoin is one of them, small caps, ARK ETFs, all of these things are all coming to life. And I'm never a huge fan of something that goes straight up, because typically what goes straight up usually comes straight back down for at least half of the move. In a lot of cases, eventually it fizzles out over the longer term and will come back and give back pretty much all of that move. So we'll see how this goes, but it is on fire right now. You do not want to step in front of the big Bitcoin rally, which we talked about over the past couple of weeks, that Bitcoin had a very bullish chart pattern. And while it hit a short-term resistance area, it is in an uptrend and is likely to keep going higher. So that is exactly what's unfolding. And that perfect storm of the financial system kind of breaking down and banks falling apart again, I think has some role in this as well. Let's go take a look at the bond chart. If we take a look at the bond chart and zoom out, we can see, let me just clear the chart noise here. If we zoom out, we can go back to the COVID crash. We ended up playing this spike, actually getting out on the day it opened at a 19% gain, and couldn't have been any better in terms of timing during the COVID crash. But overall, people have been losing their shirts on bonds. And now I think people are betting that the interest rate, if we take a look at the volume here, this huge amount, people are betting that interest rates are going to go down from here. And I've been talking to advisors and the advisors themselves, and also from their superiors of senior management and their kind of investment and advisors to them are saying, get in their investors into bonds. Rates are going to go down, get them into bonds. It'll be a good play. And I think that's why we're seeing all of this. Now, I believe everybody's already getting positioned for that. They're front running it too much. We could very easily see bonds really still trade in a big range for potentially another year or so. This could drag out way longer than people think. And just like what everybody did over here, expecting the market to put in a bottom and they're saying rates were going to go up, they actually just thought the same thing over here. So for all we know, bonds could keep going down. And if you try to pick a bottom and try to outsmart the market saying, something's going to happen, I'm going to get in position for it now before it happens, it can cost you not only a lot of money, but it can cost you a ton of time. This could be a year or more of dead money before it's in a nice uptrend where we could take advantage of different assets. And when bonds become favorable, I have no doubt there is going to be some amazing bond trades. We haven't traded bonds in a long time since it really put in a top over here. It's been in a downtrend, but bonds are actually one of the most powerful signals and the most accurate we have with CGS. It's just we're in a rising interest rate environment, so bonds are out of favor. But when they come back in, that's when the strategy really kicks into high gear, because we make more money more often because bonds provide a great opportunity to generally go up when the stock market actually has a downtrend or a pause. So these times will come around in due time, but the bond market is still floundering. It does have a bullish chart pattern down here. The overall trend is down, but this could have some life, and maybe we see it eventually put a big rally up to the 109. Percentage-wise, that's pretty good. But again, we're not trying to pick bottoms, and we're just avoiding this until it shows that we are in a nice, solid, strong uptrend. The other thing I want to bring up here is if you go to the Education Center, go to Strategy Education. If you scroll down here, well, you can see the main ETFs we trade with this strategy. But if you come down here, you can see there's also the US, Canadian listed ETFs, UK funds, some of them there to help give you some insight. And then I know several of you are trading the leveraged ETFs around our signals. I will probably be updating this because there are actually leverage bond ETFs as well, the 2X and the 3X bond ETFs. But overall, there's this info here if you want to get some insight on the markets. And this ETF list for the US is pretty detailed. There are stock indexes. We've got different sector ETFs. And of course, it shows if there's 1X, 2X, or 3X leveraged ETFs. We've got industries. We've got countries. All kinds of different countries, Americas, bonds, different bond funds, commodities. So there's a lot of ETFs here. Some of them have probably gone under because it's just the way the ETF market works. But this is a good roster. If you're looking for something and you want to see if there's a 1X, 2X, or 3X, you can come to this table and take a look at that. And again, that's under the menu under Education and then under Strategy. And if you scroll down, you'll see these lists here. Anyways, at this point, we continue to ride these markets up. Our accounts are hitting new all-time highs pretty much every week here, which is pretty exciting. And we'll just continue to ride this trend and let the market do all the heavy work and all the heavy lifting. And we just manage our positions as needed. Take care. Bye-bye.